Take it across to Sanjiv Bhasin and find out what is it that he's watching for this week. Sanjiv, hi, good morning. Good to have you on the show as always. Sanjiv, let's first discuss what really happened on Friday and post the finance minister's tweet. Having said that, I don't know whether that was the only reason that the markets fell the way they did. But the FI is selling as well in a largest quantum of 2,400 crore rupees. Do you think that's going to get undone and we're going to come back in the green today?
Yeah, good morning, Aisha. Well, volatility is to be expected at new highs. And I've been making the case that there is a little bit of froth on the markets. And if we do lighten up before the election, which is a very big event, it will be only more, positive for the market. Friday's event is always on rumor mongering and so on and so forth, interpretation, which the FM has denied. But I still think that there can be a little bit of consolidation here. We are not going to get past those new highs so easily. It is more about stock specific movement, which I foresee. A large part of the earnings, the positives are built in. However, the underpinning remains that the US is seeing numbers which are now proactive. Now there is a build-up of two rate cut at least, which was consensus one. So data keeps changing very fast. You have to be a little more nimble in trying to book your profits. I still think the longer term picture is there, but in the short run, I would expect some more consolidation, a little bit more weakness on the indices, maybe in the coming week.
What about Kotak, Sanjeev? Looking at the earnings, looking at how much damage has already happened on the stock price, and the management also sort of raising concerns that it's more reputational impact of the RBI ban, than the financial impact that they need to correct now. Do you think all that is going to now correct, looking at the numbers then?
Well, take it with a pinch of salt. When we know such a big event happened on the RBI front, it was mitigated by the impact cost, which they said. But numbers are actually way ahead of what the street was making, which was the case which I was making, that private banks were actually suffering just because PSUs were outperforming and underowned. I thought ICICI Bank, Axis, HDFC, all numbers were more and more reasonable. Now the valuation comfort comes because of the correction, and it could be a cause. But how fast the remedial measures take place? Just for example, Bajaj Finance got its act together in 6 months, got a review and got it done with. I think Kotak will also be very fast off the block. I've always maintained the cost that Kotak is one of the more expensive private banks for a reason. One was the ownership of Uday Kotak. Second was the excellent credit quality. And third is the NIMs. Now the NIMs at a time when liability franchise is weakening has come very, very strong. So I continue to think it is a buy on dips or an accumulate here. Like Nikunj pointed out, you will not get any runaway rally from here because there is over ownership and people would like to shift into faster moving stocks. But I still think as a brand, the faster they can get through this, corrective phase, this again will be back and forth running towards its way. So we have an accumulate on Kotak Bank, and we think this is a very good time. Most of the negatives are priced in. The positives will outweigh, but you need time to be given over here.
Sanjeev, would like to get in your thoughts then on the quarterly performance from an Avenue Supermarts. It's overall been in line.
Yes, Avan. I think Avenue has done extremely well in the present circumstances. And like I've maintained, I think consumption stocks and the retail outlets should do well. Now we had a contrarian buy around that 3,600 on Supermart, where we thought the valuation comfort was very much in. We still think you should book profit in capex stocks and get into some of the consumer names, names like Britannia, Nestle, Colgate, Marico. That whole basket is looking good, and Avenue Supermart also on decline should be a good play.
Interesting. Sanjeev, what about PFC REC? They were your top ideas all through last week, and now news flow impacting them as well, like Samit was just highlighting.
Aisha, they are 5 baggers in the last 2 years. Even if they see a correction of 10%, it's to be bought in. These are superlative plays. They were very, very undervalued when there was a 13% yield. I've been tracking them for last 5 years, and as a disclosure, we own them. But you cannot make the case of re-entering stocks when they are in such a big bull run. It becomes very difficult to book profit only to see that whenever the results come, they are up 10%. And results speak for themselves. Asset quality is improved. Power is in the best place ever. And we think that maybe you could take some chips off. But my top pick here again is a small mid-cap or a small-cap power company, because I think power is the sweetest play we've seen in the last 3 years and may continue for the next 3 years.
Interesting. So, Sanjeev, we are starting off a brand new week. You've already cautioned of volatility, taking some chips off the table, but any buyer ideas?
Well, Ratan Power, I told you that at 9 rupees, 4,700 crore market cap, 2,700 megawatts in Amravati, Nasik. It is coming out of the NCLT. I gave you this same as JP Power at 8 rupees when it was an EBITDA positive and only negative sentiment. JP Power is today a 13,500 crore market cap. How can Ratan Power be at 4,700? So I think this is a very, very sweet recovery which is in the offing. If you go by their plant utilization, and once this NCLT is solved, this stock can be re-rated. Now, obviously, this is a slightly high-risk play, so do your diligence, but we have a disclosure in that. We have a position. We think this stock is a doubler from here, that is Ratan Power. Second place, Coal India. I think the results were very, very strong. And that is what I've been highlighting, that the merchant power business is giving superior yields. Now, Coal India, according to me, is a no-brainer. And I think still that there is a steep to 530, 550 on this. Keep a stop loss of 456. Third play, I think, is on Friday. There was over excessiveness on the Coforge results. The management sounded extremely bullish, particularly on the Signity Technologies takeover. It's a large takeover of something like $250 million, but the synergies are so strong that they're getting into AI business in North America and so on. I think today at this price of 4,500, you have hardly anything to lose, and you could at least sit on a 25% upside by the end of the year. The synergies have worked excellent. And this is one company, Coforge, which is actually at the lowest attrition. Secondly, they are now more co-balanced on the AI side, where they are increasing their footage by organic and inorganic growth. So from my side, this is a blind play on the IT side. And lastly is Bajaj Finserv. I think in the whole basket of insurance stroke cross-selling, Bajaj Finserv has been one of the better performers. We have a buy rating on this closer to the 1710, 1720. 1620, 1630. We think this can be an outlier over here, given that Bajaj Finance has now gone through all the correction. This is a holding company. This should do extremely well. I have a target of 1850 to 1900 in the next 2 months.
Sanjeev, it's a critical week when it comes to earnings as well. You've got a whole host of Nifty 50 companies coming out with their numbers. Dr. Reddy's, L&T, Cipla, Tata Motors, SBI. What is it that you would be watching out for closely?
So, Avance State Bank, I think, will be very, very strong, given that they may be able to, in the coming quarter, book the profit of Yes Bank, which will be a bumper profit. Hero Motor is something which I would like to see the language, given that two-wheelers have been the best play in the crowd, but I think valuations are getting far stretched. And L&T is something I should be watchful, because I think the best of capex stocks, valuations are now running very, very uncomfortable. So I would keep a close eye on the large caps, Tata Motor included. I think a large part of the auto and capex, the price is the best performance is in the price. Take some chips off, go in the power sector, like we said, go in some of the financial services. Look at IT, and biggest underweight, which is consumption, should now be a very, very sweet spot, given that volumes are going to pick up, even though margins may remain flat.
Okay, thanks very much, Sanjeev, for joining in and sharing with us your outlook as well as view on earnings.
If you like this video, then like, share and subscribe to ET Now.
Sanjiv Bhasin as well, and find out what he's making of the market right now. Sanjiv, hi, morning. Good to have you on the show as always. Amidst thick of earnings, the third phase of polling as well begins, getting closer to that penultimate mark. And then money moving to China. The FIIs have been consistently selling, Sanjiv. How do you think one should navigate these times?
Yeah, good morning. I said that's part and course of the market processes. Now, Taiwan index has hit a new high, and our IT stocks have not done that much as was expected. I think the market is seeing a sectoral rotation. Yesterday, we saw very, very smart profit booking in some of the PSUs, and foreign flows will be in and out depending on the dollar and yields. Maybe, like I said, 23,000 and 22,800 is a top for the time being. And on the index, I would be very, very sanguine that there is not much upside till we get through the big election results and so on. And in the meantime, we have seen that the Chinese government has initiated a lot of reforms, particularly specialty chemical, metals, and for real estate, which is why you could see that an underperforming market is now seeing traction. The Hang Seng index is up about 9% year to date, which is as much as the Nasdaq. So I think, Aisha, there is a lot of maybe rotation amongst the FIs also as far as flows go, but that is all mitigated by the domestic flows. Because if I see, I've been traveling again throughout, and I see retail flows are very, very strong. Now, you could say there is a little bit of froth in the mid caps and so on, but a large part of that correction will get played out. So, like I said, I think there is more consolidation. You have to be stock-wise, sector-wise specific in what you want to buy. Where did you see Britannia move up by 7% and Titan fall by 7% on one day of results? So it's telling you where there is over ownership, over optimism, and where there is under ownership and over pessimism, those are getting corrected in the market, dynamics.
Absolutely. So are you recommending Britannia or is it Dabur? What's on your FMCG list?
No, I've been bullish on lever. I gave you this call around E21, 2030. I thought lever has turned the corner. Lever is a heavyweight. Along with that, Marico, Nestle, Colgate, they are all of my top picks. Britannia is something we owned some time back. We got out when it rallied. We are not, but we are looking at that. But Aisha, the dark horse here is only real estate. Make no bones. I went to look for some space in Gurgaon. It is not available. The rates are astronomical. So my top pick today is another real estate play, which I think is the most undervalued stock, and you must put your money where your mouth is. So look at sectors which are outperforming, where there is inherent demand. Gold at new highs, silver near new highs, stocks doing well, all mean the wealth effect means real estate is the real play. Along with that, FMCG and IT will now be more defensive, and pharma as a constituent for the index till the results.
Given us a lot of foods for thought, but let's just begin one by one. When it comes to real estate, still Indiabulls real estate, or would you add some of the other realty names as well to that list?
So correct, Indiabulls real estate is my favorite stock, but the one who's bought Indiabulls real estate is Embassy, and Embassy is one Embassy office. That is the stock I'm recommending. It is a REIT play giving 7% dividend yield, and 2 years after COVID. Now, commercial real estate is at the strongest place. They have 45 million square feet of commercial rental, which they are, generating returns. Plus, they've just acquired about 5 million square feet in Chennai. 8 million is under construction. There's a 7% dividend yield. They have delivered more construction, commercial real estate than even DLF. I think this is the most undervalued stock, which can easily give you a 40 to 50% upside, depending on your horizon. And I definitely think that the quality of deliverance which they have, and if you just went on the road and saw what commercial real estate rentals are going through, you'll be amazed. I think there is no downside and a 50% upside in Embassy office. So that is my top pick along with Indiabulls.
Okay, fair enough. Let's get in a takeaway from Lupin. It was quite a weak set of numbers, though you did have the lower input costs aiding margins. Sanjiv, come in here.
Well, Lupin has been one of our top pharma pick from that 700, 750. We still remain very, very optimistic. Ignore the one-off, but the business expansion. Avan, arguably, they are one of the largest players in America, and they have expanded their reach in Europe also. The type of product line and the generic pricing which they are getting, I think this stock is headed back to 2000. So any decline in Lupin should be a buying opportunity. This was a one-off. I would expect margins and costs to come down, margins to rise. I think this is one of the best pedigree stocks we have, which has underperformed for maybe 3 years, but in the last 1 year, it has been a huge outperformer. So we are bullish as a disclosure. This is in our portfolio.
Sanjeev, the other pocket which really got battered and bruised yesterday was power financiers. Even though IREDA came on the show just yesterday and spoke with us and told us exactly how it's going to really impact them. And, with such amount of cash on their books, ability to raise cash if need be, clearly it's not much of a sentiment dampener. But the way the PFC, REC, IREDA, all of them cracked, what do you do next? Do you start buying them, adding positions over here, or would you say wait for the fraud to settle down?
Well, Aisha, actually, that's the reason the VIX shot up. The VIX has shot up because fear has come in the mid-cap index, which was much overdue. Now, these stocks have run up 5 times in the last 2 years. They need a breather. Now, whether it is on infrastructure strictures or other things, those are all part and parcel. There will be denial and there will be rumor mongering. I think the best of their run-up may have been taken place. Now, you will wait much more for the government to be formed and so on. They remain structurally the best place over there. So I would say be selective in your stock picks. Our top pick over here has been Ircon and Engineers India, but we are overweight on one of the large caps, that is Coal India. Irrespective of any change, Coal India is going to power its way. Merchant unit of its 25% is giving the maximum amount of profitability. So my top pick there is Coal India. On the financiers and the other plays, I think you have to be little underweight and wait for the correction to play out. Because they are high beta plays, you don't want to be caught on the wrong side.
Okay, interesting ideas coming in there. But since we're on this subject,
on your outlook within the FMCG space, but I just wanted to get a little bit more specific, given the kind of commentary as well that we're seeing from some of these FMCG majors like Godrej Consumer as well as Marico HUL. They're talking about volume growth coming back, high single-digit revenue growth. What's the outlook as to where you're seeing opportunity here?
So, I've been maintaining this stance. Take some money off the capital good stocks, get into good FMCG IT stocks, take some money off PSU banks. And yesterday you saw PSU banks got a drubbing, but the private banks are now just starting to play up. And I still think that is going to be the play. But like I said, HUL, Nestle, Dabur, that whole basket. So if you buy a Marico, Colgate, Palmolive, these have been outperformers. I think Lever is a grossly undervalued stock, given that yes, margins will be little under pressure, but volumes are going to grow. And as you see, rural incomes rise. The aspiration to grow into a brand is unbelievable. And India is a demographic, this is the demographic premium which we pay for. So Marico, Nestle, Hindustan Lever being the top pick. And you can add a Godrej Consumer, which we had a big buy around 700. It has been one of the best performing FMCG plays. But look at the specific stocks over there. Along with that, I will again reiterate, get a little light on PSU banks, but HDFC, ICICI, Kotak, Axis are giving you a very good opportunity, and IndusInd. So these are the stocks which you must be focused on, because large cap private banks have just started their show. Their numbers are good, their NIMs are strong, and asset quality, and they have hardly any exposure on the capex side, which a large part of the PSUs have.
Okay, interesting, Sanjeev. Always good to have you on the show and get in all your thoughts on various stocks. Let me now move on and Gujarat Gas.
If you like this video, then like, share and subscribe to ET Now.
Let's connect then with Sanjiv Bhasin, who is also joining in on the show. Sanjiv, let me get in a take from you first up on PB Fintech. What's your outlook, given that it has been pretty strong in terms of the kind of quarterly performance? They've turned profitable, a 93% market share among the online aggregators.
Yeah, good morning, Avan. That has been a star outperformer in the Fintech place along with Zomato, and the business is only growing. We had a buy call at 750, 800. We've reiterated this will be an outperformer. Yes, it ran up far ahead at 1500, but we still think this is one of the best plays as far as insurance and as a platform on Fintech. So buy on declines would be the key. This is a star. This must be in your portfolio. We are overweight. As a disclosure, this is in our portfolio.
Okay, fair enough. Meantime, let's also get in a take as to what you're anticipating from L&T coming out with its quarterly performance today.
So numbers will be reasonably strong given that there is a backdrop of huge execution and somehow you've seen some cooling down in input costs. Margins may be slightly above 11-12%, but what has happened is, Awan, in this whole gamut, large part of the capex stocks have now run full on valuations, which is why we've been suggesting that some of the FMCG were the stocks which you have to buy. So inline numbers, I think that we will wait for the commentary. Generally, the stock, already prices in a large part of the positives. We know that there has been some sort of an impact as far as their Middle East goes because of the Red Sea and so on. But I would wait for the conference call. The stock seems to be maybe fully priced at the present moment. We will wait for earnings and the outlook with the management have, which should be very, very positive.
Sanjiv, hi, morning. Firstly, we were just discussing FMCG yesterday, right? And what a big move coming in across the sector. I mean, be it Marico, Godrej Consumer, Unilever, the entire pack was a buzz. Have you extended your list from Unilever? Added more names to it, perhaps?
Well, for one, sweet Achut caught the bottom of Unilever at 2200, and that is where we said that there cannot be a better stock to buy. And that is evident now. Marico and Unilever, Nestle, Colgate, all four are in our portfolio. We have not extended. We would wait for some decline before adding. But we have turned overweight this and technology. We think they are going to take the mantle forward. And you should take some money off PSU banks, capex stocks, which I think are fully priced now on an earnings. But yes, Lever is our star, and we still think Lever is headed to 2700 in the next 6 months.
Have been at the forefront. How are you looking at earnings? Where is it that you're finding comfort within auto ancillary and auto?
Good news came that they've extended 18th as a trading day, but they've given up the concept of extending trading hours. So I had prepared my bed over here in the office, and I think that will be done with. So I'm very pleased with that. It leaves more time for us. Coming to Tata Motor, I think large part of the best news may be in the price at 1,000 rupees. Maybe it's fully priced. But if you're looking for the next 6 months, then the China comeback, especially JLR, that is seen very, very strong. And I think three things: autos, specialty chemical, and metals. These are going to be commodities are going to be the play from China. China, as you've seen, has been re-rating, and you've seen a strong accumulation. In fact, some FIs have now started to sell here and buy some of the Chinese, particularly these three sectors which I've said. So I would look for the language of Tata Motors. JLR has been a rather sweet spot as far as UK goes, but let's see how China plays out, because that is where their main emphasis lies.
Sanjiv, what is it that you're making of Voltas' numbers? Because the fact that there was all around margin disappointment, that does come as a surprise.
Correct, and we expected that the stock had already run up fairly in the time when there was a strong winter. But Voltas is not a 1 day or a 3 week story or a 3 month. Aisha, the thing is, it is going to be the consumer-facing arm of the Tatas, and they are putting a lot of emphasis on that. Now we know that some sort of margin pressure played out on the engineering side in the Middle East, and that could be a one-off. But at this price, I would not advocate a buy. I would say let it settle down, look through the numbers, give it some time. The stock has almost doubled from 750, 800 where we had a buy. And we think large part of the good news is already there, even though we are at the onset of a very strong summer where sales will be very, very strong.
Okay, that's the take coming in on Voltas. Meantime, let's get a quick view from you. I know we've spoken about real estate quite extensively, but do you believe that it has the momentum to continue for this year? Would you be looking, Sanjiv, at infra as well?
Awan, you can't believe it. The prices, at least where I stay in Gurgaon, are hitting the roof, and there is no let up. DLF is selling like hotcakes, so is Godrej. And this triple effect of wealth, gold, silver, stocks, all-time highs, is seeing a large part of the overall inventory reduce in prime cities. I think it's the same case with tier 2, tier 3, and I still think they are input. So you look for the input costs, cement, steel, those are going to do well. But large part of that is in the price. So like we suggested, we think Indiabulls real estate is the best proxy play we have. 6,000 crore market cap, 4,000 crore capital infusion. On 22nd May, I think will get the NCLT merger move where Embassy takes over. Embassy itself is in the process of large commercial rates are hitting new 3-year or 4-year highs, which is telling me that they are in a very sweet spot. Now the stock prices, maybe part of it is already depicted in that. So you have to look at your horizon. If you have a longer term horizon, then you can still buy, or then if you have a shorter horizon, wait for some correction.
Sanjiv, great to have you on the show. We'll let you go on that note and see you tomorrow and chat more on stocks.
If you like this video, then like, share and subscribe to ET Now.